So now we get to the exits. How do you exit on trend days? Of course, we discussed exits in great detail when we were looking at the fade setups. We had various exit techniques and we had certain rules. Well, with trend days, it becomes actually more simple. All right, and I'm gonna break it down into two separate categories. One, and the main one that we're going to discuss, is how do you exit if you do get on board the trend early. If you either get on board at the open drive or at an initial breakout of early balance, or even if you had faded a zone and then it turned into a trend and you were on board. If you got on board in any of those ways and now the trend is confirming and you can really see that it's going to very likely be a trend day, then there's a very specific way you need to exit. And that has to do with a simple observation, and that actually has some stats attached to it. And this observation is that most trend days will close near the extreme of the day. Now, we had mentioned this many times before, and this is actually part of the very definition of a pure trend day is that it'll open at one extreme, close at the other. Now, the vast majority of days that show real strong trending, even if they end up balancing a big part of the midday to afternoon, will end up closing near the high for an uptrend day or near the low for a low trend day. Now, what does this mean? If you know this, and there was a stat that I heard from a very prominent trader and market statistician who had done studies on trend days. And he did it on the equity indices in specific because there's a bit more information in terms of the market internals. But he basically noticed that when you had a strong trend that was confirming, and if by midday, the advanced decline line is really confirming, it's one of those days where it's hitting extremes and just trending right along, either up or down, potentially hitting those minus 2000 or plus 2000 extremes. Or if it had opened at a positive number and then been trending down, it won't be hitting at minus 2000, but it'll be trending down the whole day. And the tick distribution is really sloped to one side or the other. He found that pretty much 95% of the time you did not get any sort of sustainable reversal, and the low of the day on downtrend days came within the last hour, and the high of the day on uptrend days came within the last hour, and then we ended up closing near that higher low. So, for other markets, I'm sure it's extremely similar. Trend days have very similar characteristics. Other markets, you don't have the internals to help you gauge how strong of a trend it is, but you might have other things. Sometimes you don't even need that. All you need is just to see and feel the persistence of price in one direction, the lack of any large reactions the other way, any bounces or any retracements the other way. And it's just persistence in one direction. If you've been noticing that early in the morning and then by the midday you haven't seen any reversal and then it starts breaking towards the continuation of the original trend, you can be 90+% sure that you are going to make the high or the low of the day within the last hour, and you're going to close near that. So given that, what would be an ideal exit strategy for trend days? What would be something that would make use of these stats, which is just great stats, something like 90+% of the time when you have this type of day? What would be a great exit strategy to take advantage of this? Can you think of one? Well, here's what our exit strategy is. If you get on board a trend early in the day, either on an open drive or a breakout from balance, or you happen to fade a zone that morphed into a trend, and you had already the conditions of a trend and you are likely seeing that the trend potential is high, you do not scale out of the position and you hold it until the last hour of the day. Okay, so this is something that very few trading teachers will teach you to do, because psychologically this is one of the hardest things to do. Okay, most trading teachers want their students to feel good so they keep buying their products and services. They want them to feel good at the expense of their bottom line. They want them to have comfort in trading. While the great traders are the ones that can handle the discomfort and do what comes unnaturally and reap the great benefits. And it's not just most trading teachers that always scale out and do that type of thing. It's even some good traders. There are some good traders out there who can read the markets exceptionally well and will have a good positive edge, and yet they greatly underperform what they could be doing because they're always scaling out. Even when everything comes together and you have the conditions for trend and you're seeing early confirmation of it through an open drive or something like that, everything's aligned and you get on board pretty early, but then what do? They scale out of a lot of their position, and then they'll take the whole exit off at some extended target. Whereas the reality is that when you have a true trend day, most likely a very high percentage of the time, it's going to keep going all day long. It might stop in the midday, it might have big bounces and all that, but eventually it'll usually, the high majority of the time, keep moving in that direction until the very last hour. So if you can condition your mind and just make it a rule, which makes it a lot easier. When you make something a rule, then you don't feel bad when it doesn't work out because it wasn't a decision that you made. It's just a rule. You follow it this time. Sometimes it works and sometimes it doesn't work as well. And then, you live with whatever results you get. But if you think about it big picture, long term, you are going to come out so far ahead if you can actually manage to follow this rule that I'm giving you now. So let's jump into the charts, see how that would play out most of the times, see what you'd have to sit through to actually see it happen, and then we'll also talk about how you exit the other setups that you use to get on board the trend intraday. So let's just jump into the charts and check that out. Alright, so this is a trend day that we had looked at before. We had broken out of a tight 2-day balance and just open drive down, and we discussed how you should have gotten on board this thing early, either on the initial open drive or on the first retracement back up. Of course, given the fact that you had done your homework, you had seen the conditions, and now you saw the confirmation of it. But let's assume you had gotten on board either here or here. You would not be scaling out, and you would just be letting this thing ride. Now realize this looks easy when you look at it after the fact. You go, yeah, it's easy to just keep letting it go. It just keeps going in my direction. It barely retraces, right? And it closes right here at the lows. So if I was getting out in the last hour, I'd be getting out somewhere around here near these lows. And that would be a massive trade. That would be over a 20-point trade. And if I had whatever 2.5 or 3-point stop to begin with, that could be about 7 or 8 to 1 reward to risk, which is a huge trade. But let's look at the reality of what you're going to have to go through psychologically to actually be able to pull off an exit like this. The first thing you have to realize is that as you're coming down, you're going to be hitting some support levels. And your first inclination is going to want to take off the position at the support levels, or even to scale out of it to protect some of your profits. Let's take a look at some of those support levels that could be here. Alright, we've zoomed out. Well, one of the first support levels you can see is right here, which was the place after we had gapped up, we had driven up and had our own trend day. Not so huge as this one, of course, but it opened at one extreme, closed at the other, and didn't give anything back and kept this open gap. So let's draw in those lines. Okay, so we have that support zone. Then we also have the actual gap close here that also coincides with the previous highs. It hit once here, hit another time here, another here, and then it finally broke out of them. So that'll be another support zone. Let's draw in those lines. Then we might have some other little ones, but let's go to the big one. Let's zoom away a bit here. Alright, and here's going to be the important one, this high volume node that was tested once and held. So let's draw that in. Alright, and let's put in the lines there. Okay, so We have the most important levels on now. Now let's go back to that day and see what you would have had to sit through if you were trading that, if you were holding that trade. Alright, so here we are at the first zone. This is what you would have been seeing. If you had gotten short either here or here, now you're hitting the first support. And now you see the candles bouncing. Your psychology at this point is, oh my god, I'm going to lose this profit. Alright, this is natural. What you're going to have to do is recognize that feeling, let it be there, don't try to deny it, but also you're going to have to override it to be able to do this. You're going to have to recognize it and override it. Now, of course, in the psychology section, we're going to go deep into how to really prep your mind for optimal trading, but I'm just want to talk about it right now because the exit itself is infused with correct psychology if you're going to be able to hold it to the end of the day. I can't just tell you to hold it to the end of the day and I'll tell you what you're going to be going through. So you see this bounce and it's going to look scary, but you're going to have to hold and just think long-term probabilities. Think no matter what happens intraday, if this is going to be a trend day, which it really is looking like one, then more than likely this thing's just going to keep going down. And I'm going to sit through these bounces. Alright, so let's see then what would have happened. So it would have, bam, right through. And here we go, we hit another support zone. And now we're popping up again. Now you think, wow, I've gone down all this much. And now it could really, the whole thing could reverse. Well, again, if you've gone down all this much, everything is pointing down. The market internals, if you're trading the indices like this, will be all confirming. You just got to keep holding. Recognize though there are two dangers here. One is that you're going to start potentially reading into things too much. If you see some small divergence on tick here, you're going to go, oh, maybe I should get out now. Well, like we said, if you don't get in on divergences against the trend, there's no reason to exit based on them. Especially small ones that you'll see that happen, like from here to here. This could be a tick extreme, which it likely would be because there's a lot of momentum, and this will be a smaller one, and you'll be thinking, oh, should I get out? No, you shouldn't. This is now confirming itself to be a trend here. You hold. Alright, now here's one thing that you can be doing now to make yourself feel better, let's say psychologically, and allow you to keep holding. So if you had gotten in here, then now we've moved far enough away and we've confirmed far enough that your stop could be above this balance area right here. The high volume node of it will probably be somewhere around here. So your stop could come down to around 45, because with this strong trend day, you really don't expect it to go all the way back up here and take out this high volume node and go higher. If it does, then you're seeing a reversal and it's no longer a trend day, so that invalidates your trend day idea. That's what we want to do with stops, right? So if our original stop, we had gotten in here and our original stop was somewhere around here, now we can move it down and start protecting some profits. So now we can lock them in. So in this case, we are not locking them in by scaling out. We lock them in by moving our stop down in protective mode. Now you don't want to, for instance, move your stop down all the way here because you're so scared that this thing's reversed. You got to give it room, because here's what you have to be thinking. What would invalidate my trend day idea? Not what would protect my profits to the maximum. Because if you put it here, right above this mini little high, this thing can so easily come up, take it out, and just go back down, and you've not disproven anything. You haven't disproven anything. The trend day would not have been invalidated if this thing gets taken out. That's nothing. Yes, it's a previous little high, but a bigger pattern could be forming. You could be forming a big sideways balance area before you then break down. So it really doesn't mean much if you take this out. But if you go all the way back out and take out this high volume node, this congestion, then it's saying like that's not typical behavior. You're getting way too much buying pressure. Right, so for now you would have to keep it somewhere here. Now if you had gotten in here, for now you really can't be protecting any profits. What you can do is now move it to break even. It no longer has to be up here, it can be at break even. Right? So yes, you're sitting on a 10-point profit if you'd gotten in here, and no, you can't take your profits because you know, or you should know, that the potential is this thing could go down another 10 points. So why would you be taking your profits? That's one. And two, you have to realize now that as scary as it seems, the odds of it actually coming all the way back here are very low. Once in a while, yes, it'll happen, and you're going to feel bad and you're going to go, I wish I'd taken my profits. But you won't if you think bigger picture and longer term, and you realize the other 9 out of 10 times you got a much larger profit because you didn't take it. All right. Of course, this all has to do with you being good enough in your market analysis and have studied enough, have reviewed the videos, and have looked at historical charts and have really dedicated yourself to know how to get on board the trend early, to know the conditions for likelihood of trend, and then to know what it's like for it to confirm intraday. And that's what everything we've been training you here to do. All right, but you got to practice that. But once you do, now you're holding. And so let's see what happens next. Bam, we go through it, we retest it, and we're going down even lower. And now we've just hit yet another one. All right, and this often, if this was a good zone and it did cause some sort of bounce and now we broke through, often as we come back to retest it, the support becomes resistance, and this is, a setup in and of itself to get short on a mini setup while you're holding the trade. See, the whole idea is you'll be holding one trade, but you'll be entering separate independent trades apart from holding this one trade. So it's like you're adding to your position, but you're adding to a winner. At this point, you really have a big winner. All right. So by now that it's broken all the way down to here, now where can you move your profit to? Now here it gets a little tricky because we're hitting very close to the last hour. This is like around 2:30 Eastern at this point. So there's half an hour left and we're in the last hour, and we're hitting a pretty important support zone. So if at this point, you're getting close to that last hour and you're hitting an important support zone, I wouldn't fault you if you just took your full profits right here. You're already 20 points in the clear, and this would be probably a good place to take profits. But if you wanted to stick to the rules by the book, you'd wait until the last hour. Now, the likelihoods when you hit something like this, you can see some sort of bounce. So, again, since we're close enough to the end of the day, and the likelihood is that you might see some sort of reaction after you've been down so much, now you could take it. You're almost within the last hour and you're hitting a support zone. So that's fine. If you weren't hitting a support zone though, you would be waiting till you're well within that last hour, and often it just makes sense to just hold it till the close. Literally, like just hold it to the close. Unless you're right before the close you hit some major support resistance zone, then there's no reason to lose a few points based on a reaction. But if you're not hitting anything, you can hold it to the close. And let's see what happened on this day. So indeed we got the bounce exactly off the support zone right here. We had this little mini double bottom up, but if you hadn't taken your profits, which by this time you probably would have, because you would have been hitting the last hour already here, it would be pretty much 3 p.m. Eastern, so this could be the low of the day. We don't have to close at the exact low, it just usually comes within the last hour. So now you're hitting it, you probably would have gotten out here, but assuming you hadn't, and now you're seeing this, it's not much of a reason to get too nervous. It's actually usually a good time to put on an independent short setup, because this, like we had seen before, like a double bottom like this will usually fail somewhere around here. And let's take a look at what ended up happening. So we ended up basically going a little bit higher and then falling down to close at the lows. But before that, if you wanted to protect your profits, by the time you were here and you're not at the last hour, you're not at this resistance zone, but now you're here, maybe you could move down your profit exit from up there down to here somewhere above this zone. All right, if you're here, now you really don't want it to just be reversing, taking out this and going above this previous support, now resistance zone up to here. So maybe you'd move it down to here and you'd lock in a good 10 points or so, 9 points. But then finally, when you're down here, you would just take your profits somewhere close to here. All right. So that is how you do it. And each day is going to be different. Some days are going to make it easier for you because, like this day, actually, relatively speaking, would have been easy because you never really got any big bounces, right? You got very small, tiny bounce here, very tiny bounce of this support zone. And finally here would have been a time where you could have been taking your profits anyway, so you didn't really have to sit through this whole thing. So this day would have made it relatively easy for you. Some other days will make it harder. Let's take a look at another day that would have been a bit harder to do. Alright, let's take a look at this day. We've seen this day before, which was the massive gap down out of the big balance area, and then we got this huge trending movement down for the first 2 hours or so in the morning. And if you had gotten short on the open drive or on the first bounce back, you were riding a massive winner. And here you would have already been up, over 20 points. And I'm sure there would have been some support or resistance levels. Now, in this case, what ended up happening is we were hitting a major long-term support down here, and there was good odds of a decent sized bounce. Now, most of the time, and in general, I'll just tell you, it'll probably do you very well just to play it by the rules. Like, this is a trend day, I'm gonna hold it till the last hour. At this point, it's only been 2 hours. And given that fact, given that we had just broken out of a major balance with a huge gap, and now we're confirming, you don't know if this thing's gonna go another 20 points down. So even though you're hitting major support, most of the time, it just makes sense to just stick to the rules of trend days and just hold. Now, if you had been hitting right here some historical sentiment extreme, like some incredible negative tick readings, and the advanced line has been getting to levels already that you haven't seen before, coupled with a major support, fine, there are certain exceptions to the rules where it just makes sense. Why sit through a likely massive bounce? Okay? But absent of some major historical extreme, you don't know if this thing isn't going to keep breaking down another 20 points and give you a massive, massive profit by the end of the day. And that's the beauty of trend days. They give you great profits. They let your profits run by default. So absent any historical incredible readings that would make you exit here, you would, by the rules, just sit through it. In this instance, you would have had to sit through some scary stuff. Let's look at what would have been happening. So you got a quick bounce, and it just kept kind of going higher. And now, by the time you're here, this is seeming scary. You've retraced almost half the day. Okay? But if you stick to the thought of long-term thinking, if you stick to the thinking about the odds and the stats tell you that the low of the day is very likely to come within the last hour. And if it's not going to come in the last hour, you're very likely to still close near the low of the day regardless. Okay? So, you didn't know this bounce was going to happen. You couldn't see the future. Now you might be kicking yourself thinking, well, there was big support here, I should have known. But sometimes trend days will cut right through support. So you can't really blame yourself like that. You have to be proud of the fact that you're sticking to the rules. And while this day seems to be punishing you now, 9 out of 10 other times, you'll end up benefiting for it. So just think big picture again. Now, if you had been holding here, where would have been your stop move to? Like, where would you have been locking profits up to? Well, definitely not above this one. That's only the last minor little high. So most likely it should be like right above here, which was a decent balance area and also was these last two highs. So right here. So if you had gotten short at this here, this first retracement or early in the open drive, you would have been locking in about 6 or 7 points of profit. Not much given the fact that you had went down 20 points, but hey, that's what this type of day happened to be. So let's see what would have happened now. So price kept going higher, right? And you're close to your profit exit, so you would be nervous at this point. But if you're doing things correct by correct process, you would just be holding and letting the odds play out. If it doesn't work this time, fine. And so we tried to pop back up. We did, but we didn't take out your stop, and this is what ended up happening near the close. So let's zoom out and show that. Alright, here we are zoomed out. And as we see, you never got your profit exit taken, and near the end of the day, we just tanked down, and you might have been able to get out somewhere around here if you were holding till the close. So despite the fact that you had to sit through this, and despite the fact that this being an abnormally large bounce, you still got a huge profit. So, even on the times that it doesn't seem to work well, you still end up doing quite decent by sticking to the profits. And if this thing hadn't tanked back down and just closed here, fine, you might have been kicking yourself that, oh, I could have gotten here, but so many other times, not getting out here would ended up giving you a much larger profit by the end of the day. Overall, you're going to benefit from this. So, of course, the fact that you're able to move your stop will help you psychologically to protect profits. And just remember to only move them to places where the trend day idea would be invalidated. If you have that, fine. If you don't have that, you just gotta keep it there. Maybe at that point you may move it to break even if it's moved far enough away, but you don't just move it to random points just because you're scared of losing profits. You got to be willing to sit through these retracements, and that's what the great traders can do.